Welcome to EnergyRogue.com, the go-to source for the latest insights and analysis on the energy commodities market. Led by two industry veterans, Bill Shanahan and Brian Pieri, as they host their weekly commodity market recap. With over 55 years of combined experience in the energy sector, Bill and Brian bring a wealth of knowledge and expertise to the table. From trading and hedging to finance and optimization, they have seen it all and are here to break down the latest market trends and share their insights. So sit back, relax, and get ready to dive into the world of energy commodities with Bill and Brian on EnergyRogue.com.
Hello, everyone. Welcome to Energy Rogue Wednesday. You know something, Brian? When I hear that guy say 55 years of experience, my first thought is that, man, you must be really old.
Well, I think I need a career change.
You are the worst wedding singer in the world, buddy.
Yeah, that's where I'd be for sure. That would be me. So, and then at some point, you know how that is. The wedding singer always gets all the good looking babe.
Wedding singer.
Yeah, but mine usually ends up with this one.
You can learn to deal with the fact that you're just a wedding singer, not a rock star.
Great movie. As a matter of fact, I saw, I don't know if this is true or not, but I saw that they may be making a sequel to Happy Gilmore. They might be making.
Oh yes, it's coming out. Happy Gilmore 2.
Really? I am excited about that. Unfortunately, I believe Carl Weathers will not be part of that. So,
right.
So I'm disappointed about that. So Carl Weathers and Bob Barker. Bob Barker is the other one. So
yeah, I loved it when he beat him up.
yeah, leave it to Bob Barker. So listen, folks, today, we are going to talk about 5 market signals that indicate a natural gas price spike and how to predict those market moves. You can use Energy Rogue. You can also use your own intuition and Google skills. So there's multiple ways to approach this. We've tried to make it easy with our product, but we'll show you a little bit about our product, but also how you can actually determine these signals for yourself. So any thoughts on that, Bill?
I think sometimes we try to oversimplify the market. And when you do that, if you're looking just for one thing, because we say 5 market signals, that seems like a lot. Actually, that's probably just the 5 main ones. When you start
put
getting
your effort and concentration into playing to your potential to be the best that you can be. I don't care what the scoreboard says at the end of the game. In my book, we're going to be winners.
That's it. That's exactly it. Because it's we're just going to hit the 5 ones that you need to be paying attention to. If you're really getting serious about the stuff, you probably need to go even a little deeper than that, because it's a profession.
Well, there are, or said a different way, one time when I was on a trade floor, I handled hedging for producers. So I was on a trade floor and handled the financial hedging instruments for particular producers. And I had a producer call and say, hey, well, next month, are we going up or down on natural gas? And the trade floor that I was on had 500 people. And I asked the person, I said, how much time do you dedicate to answering that question? He says, what do you mean? And I said, do you think about that once a week or twice a week? And he was like, yeah, probably once a week. And I said, I have 500 people behind me working 60 hours a week to figure it out. And they're wrong a lot. So the thing is that you can be educated. You still can be surprised, but it's important to study and be equipped so that we have a couple examples in here of times when the market was mispriced. So we actually talked, we're actually going to talk about some of those case studies. But as Bill said, if you If you treat it like a hobby, you're going to get a hobby type result. If you
Right.
treat it
So
like profession, you are going to get professional results. So it depends on how serious you are, right?
and you gotta have your goal
The
too.
goal
so.
should be to buy wins.
Yeah, I love that movie.
And so what we're going to try to do is help you learn how to buy wins.
Yeah, that's what we're going to do. So these are the 5 market signals, and today's live stream is going to be about the 5 market signals. Probably not the ones that you may be thinking about if you're looking at technical analysis. We will cover that in a different episode, but these are the 5 market signals to take a look at. So, so let's see. We got Robert. Hey, Robert, good to see you. So glad. Thanks for chiming in, and we do see these comments come through. So feel free to add comments and commentary along the way. And these are going to be the 5 market signals that would indicate a natural gas price spike. So these will be how to stay ahead. So why does natural gas prices spike, Bill? Do you know?
So there are the main fundamentals is going to be demand, and demand is always going to be affected based on seasonal, whether it's weather, storage, electricity, and now LNG.
Right. Wait, were you going to say something more? Was that a stopping point?
That was a stopping point.
I thought there was more to that. I was like, okay. So
Well, that was only 4. You're going to go for 5, so you want me to go to 5,
right? So prices on natural gas swing wildly, which means there's amazing opportunities around natural gas, but an amazing opportunity for risk. So risk controls and are going to be super important whenever you are trading or hedging natural gas.
And so, and the other thing to point out here is when we say that it's got high volatility, as you can see there in point number 1, 20 to 30% is off the charts volatile. Yeah. There's no other commodity that you trade that moves that much.
Let's just say this. You will have news breaks on every news station if the S&P 500 drops more than 2% on a day. So in relative terms, 20 to 30%, it's 10 to 15 times the volatility of stock markets. So the key is, if you are going to trade the commodity, if you are going to hedge the commodity, or you own the commodity or are buying the commodity, staying on top of these trends will help you. So understanding these 5 things are going to help you. This is not the complete version, and this gets back to what Bill was saying. There is, we've been in the energy business and trading energy commodities for 30 plus years, and there's something new we learn every single day. You know, so the key is to stay on top of things and develop a repeatable process. So whatever your process is, this will help you create a repeatable process. So
and also know wherever you got your gas located, the less, what's the word I'm looking for? The less liquid it is in that location, the higher chance of volatility.
Right.
And that's why we say this is a little nuanced, because it depends on where you're trying to price. And so if you're pricing
if you're talking about the financial commodity, that's something different than the physical commodity, and it's something different than the physical commodity in Montana versus Texas.
Right.
Right.
And I mean, where were we a year ago? Our price was in the 2s still last year at this time.
Yeah.
And so that's 100% change. That's unbelievable.
Let's just say this. We pulled up a live stream from 10 months ago when natural gas was struggling to stay above 2, and we had a projection of seeing $4 for natural gas. People thought we were crazy, And we were studying these 5 things, and these are the 5 things that we were doing. Now, it took 10 months, it took 8 months to get there. That's the part that takes a little bit of more attention. So it's not whether it's going to go up or whether it's going to go down. So as much as 10 months ago, we predicted from 2 to 4. In 2022, we predicted from 9 to 2. So the thing is that these are broader perspectives that you have to look at, and then depending on your time horizon, it gets very specific from there. So so these are the 5 areas that you should focus on. And again, today we are not going to cover technicals. That is a different lesson, a different discussion. So we're going to talk about supply, we're going to talk about demand, exports, weather, and crude and geopolitics. That sounds like it doesn't fit. That sounds like the what was the Sesame Street? Which one of these? Which one of these
Yeah.
is?
What does it? Yeah. Not like the others.
Yeah. I wish we had a clip of that. That would be great. I'm dating myself now. So supply, demand, exports, weather, and crude and geopolitics. That sounds very simple, but let's dive into it. So the first one is supply. What are the key factors to watch? Lower supply equals higher prices, higher production equals potential declines. That's simple economics, right?
That's the scarcity rule. The more scarce it is, the higher it should be.
But I'm going to bring up 2 stories, and one of them, Bill mocked me during 2022. It's very, very disappointing, but I mean, we get very fervent on. He mocks me all the time, and we get into heated discussion.
Sure about that 5 minutes?
We get heated discussions every single time. But he mocked me because I kept saying the same thing during 2022 when we went from $3 gas all the way up to $9. I said this makes no sense. This makes no sense. We're going to go down. And I was wrong for multiple months. However, when I was right, that thing tumbled from $9 to $2. So time is the elastic part of the equation, and looking at these market signals. And the example that we have here is in early 2022, we did have, this is actually what scared us. There was a bunch of well freeze-offs in Texas that contributed to a 40% price surge in a few weeks. Later in 2022, we went to not a 40, a 400% price increase. So the thing is that depending on what you're looking at, trends matter. And understanding what is the supply, what is the movement, and it is part of the reason that we actually track in our platform. And we're not going to really talk about that. That's not going to be in the commercial, but that's one of the reasons. That's one of the reasons that we actually cover and track and trace what is happening on the production side. So we have interactive charts where we can determine, okay, during 2024 we were rising, but it was really flat to 2023's exit. So 2024 was pretty much a flat year. It was sharp down and then trended up, but production trends, pipeline flows and storage levels, as well as imports. And that's another chart that we actually look at. Is we look at what we get from Canada, which is very important to watch, especially when you're tracking things like tariffs. So
Right.
the tariffs on Canada, that actually, I believe it had an impact. When volumes flow and change, you're going to have different opinions, but tracking the supply trends is going to be important. So, anything to say on that before we move on?
Well, I mean, to me, when you start looking at the various different things on supply, is understanding how much of it is significant and how much of it is lesser significant. In other words, volume matters. And so if we see and don't always go with percentages, because you got to look in absolute numbers to be able to understand the impact the supply has on demand. And so if you see, you can see a large number of supply decline, but knowing and taking a look at the weather or taking a look at anything else, you can see, well, there's a reason why.
Right.
And that's what we try to do, is figure out the why. We work with you on that. We try to show you all the different things that's happening within it. And that's why when you look at Rogue Radar, you get this green light, red light. That's sort of our quick, fast way to show you, all right, this is positive, this is negative. And
this is what we look
exactly
at right here. This is right off our Rogue Radar report. We'll talk about that a little bit later, when we get into that. But
those are the things that you can look at quickly and say, okay, now I need to go look at this. Now I need to go look at that. Now it's not an easy button. If it was an easy button, both Brian and I would not be talking to you. Would be on our island in the Caribbean enjoying it. But what we try to do is help you get to the point to where this is something that you can look at, and when you have to make business decisions, and whether you're a producer, whether you're a consumer, whether you're a service company, you may be thinking, hey, listen, I need to bring in a couple more workover rigs. And you take a look at the year ahead and you go, well, maybe only one workover rig, or maybe three. So that's the things we try to help you to do. And if your industry or your business, your personal business, relies on the price of natural gas, and a lot of them do, almost sometimes indirectly, but sometimes directly, then you need to know about this stuff. So we start off with supply. So that's the main thing to look at. And just remember, 1 BCF changes price.
Well, and getting back to percentages, if you have 10% on 10 BCF, that's a BCF. If you have 10% on 105 BCF, you have 10.5 BCF. That's a lot.
Right.
So
that's a lot.
So market signal number 2 is demand, looking at power, residential, and commercial. So why does it matter? It matters because if you're tracking and tracing, you have seasonal patterns. And those seasonal patterns are important to track and monitor. For instance, in the summertime, power demand for natural gas goes up significantly, and that's because of air conditioning load, and that becomes is kind of heat related. And we'll get into heat and cooling degree days a little bit later. But in the winter, residential and commercial are very important, and that comes from heating furnaces, incremental natural gas that is burned in furnaces. So understanding where you are, we're approaching the time of year that is called a shoulder month, and that is a low demand period for natural gas. This is actually when we convert from winter, where we are withdrawing from storage, to when we are injecting into storage during the shoulder months and summer months. So that is actually what we track and trace. So listen, Max. Oh, hey, Max. Yeah, I just sent you an email. So these reports released at consistent time. Yes. Thank you. And quick question: Rogue Radar reports. Yes, I just sent you an email this morning on this, Max, because Max sent me an email on this. These reports, and I'll go ahead and talk about this. So Rogue Radar is our base subscription for $89 a month. And in that subscription, you get access to our videos, which we talk about what is happening. You get access to our Monday game plan, which gives you a text-based as well as pivot points to watch for the week. And these points can be very valid, such as 6848 and 4174, you'll notice that pattern. But along with that report on Monday morning, you get a video that kind of talks through that. Rogue Radar comes out a little later in the week because there is a EIA petroleum release on Wednesday and a natural gas storage on Thursday, and Rogue Radar is delivered shortly after the storage is released at 10:30 Eastern time. So at 10:30 Eastern time is it takes me a little longer because we're writing a narrative around what has actually been released so that we can actually discuss that. So it takes me a little bit longer. So I'd probably say an hour to 2 hours after the EIA storage release, this is delivered. So Max, thank you. Really appreciate you stopping in, and just email me if you got any questions on that. So appreciate you stopping in.
And folks, when you look at our charts, we got them set up to update around releases. And so if you're looking at if the EIA or other agencies, as they release data, we try to make sure that we're updating as soon after that data is practical.
Yep.
In some cases, it's like within hours. In some cases, it's like the next day.
Yep.
It's overnight.
So evaluating when these releases happen and also what is incorporated in these, because that's the rooting of a lot of our data, especially what I'm showing you right now is on our Rogue Edge subscription. And that is definitely key. So let's see, Max, good to know. Awesome. So listen, thanks so much. Really appreciate that. And Max, feel free to reach out. So market signal number 2 is demand on the power and residential commercial side. So when we look at various demand factors, I mentioned power being a big draw in the or a big demand during the summertime. And what you'll notice here on this chart right here is that we are going in a pattern where every winter we have higher lows and we've had higher highs on power demand during the summer. So that is a very big summertime impact. Now, if you add in residential commercial on top of that, what you'll notice is as power drops, residential commercial expands during the winter. So, and it expands, it's much sharper because there are other fuel sources for electric power in the summertime. There's been a lot of renewables that have been added to the equation and a lot of factors that have driven there. When we look at the electric power grid, which is something that that we actually track, this is by hour. These are megawatts. And what you'll notice is different colors. Down here is coal. Then you have nuclear right here. The green is natural gas. Solar is this orange right here. Then you have water or hydro. And then you have wind. And what you'll notice is wind is made up a lot of power. But natural gas and coal are typically standby fuels that are utilized. So understanding this is key, as well as what time of year that is that you're in. So market signal number 3 is going to be exports. Exports, right? Where do we export? Where do we export natural gas, Bill?
So two main places we export natural gas one is to Mexico. That is usually running between anywhere from 3 to 6 BCF a day. And so it can swing pretty widely. And then the other is LNG. What's interesting about LNG is how much it's grown. I mean, it's relatively in the world is a new phenomenon. For some of you, it's actually we're now approaching it. We've been doing LNG now for 8 years, I think it is, something like that.
Right.
And So it has grown because when it grows by a plant. That means something mechanical has to be built.
Right.
And when they do, those plants run anywhere from, I think seem as small as 3/4 BCF up to 2 BCF. Now, why does that matter? It's because if that plant goes down, that comes off the demand immediately. And so when you're dealing with something mechanical like that, you have to watch out that any mechanical problem they have is an issue that can affect the market very quickly. So it's important to understand those imports and I mean those exports. And so with LNG, about 40% is going to Europe, about 40% is going to Asia, and the other 20% is sort of all over the world.
Yep. And these are the expansions. Plaquemines, which is currently online right now. Then you have a Corpus expansion that is expected in 2025. You also have Port Arthur that is expected not till 2027. Golden Pass, which should have been online, but that's been delayed. But what you'll see here is that we very quickly go from 14 BCF a day up to 22 BCF within the next 24 months. So that is an important market signal. And these are things that are coming down the line, and this is very important for you to track and monitor. So the
What's
export.
also interesting about that is we also, the Kitimat, we look at Canadian exports from time to time because the Kitimat should be a significant exporter of Canadian gas, and that may impact our imports.
Yep.
So,
Yep. And this is where looking at the exports, natural gas used to be looked at as a U.S. only product. So when you would look at NYMEX or Henry Hub, it would only be applicable to supply, demand, imports, exports in the United States. Now all of a sudden, 2022, when we went up to $9, Europe went from $14 a decatherm to 80. And during that process, the US actually increased significantly. So it is now a global commodity, and understanding that is going to be key. So what is the next thing we look at? What do we say impacts natural gas?
yeah, there's only in the winter, there's only 3 things that impact natural gas, and
What's
that's
that?
weather, and weather. And I've come up with a 4th one,
Ooh.
and the 4th one is European weather.
And this is again part of the reason that we actually high grade this so that people can, instead of searching a lot of different sources, you can go to NOAA, you can go to a lot of, I was on a live stream today with James at Arcus FX, who is a great technical trader out there. And he mentioned a Twitter channel for, I am not going to call it X, Twitter channel, a Twitter channel. I'll say that again, Twitter channel. And on weather. So what we actually have is we have built into our system a gas weighted degree day, and we actually track that. And one reason that we've gone up today is because of new runs of weather, and this is what has drawn us up. Over the next couple weeks, we were expected, after this week's draw, to add to storage the next 3 weeks. Okay. Since last Friday, where we were looking a lot more bearish, now we are withdrawing on these 2 weeks. We're still drawing in that 3rd week out, or still adding to that. So what that means is when you're seeing a minus, that means we're withdrawing, that there's less volume in storage. That means price is going to go up. So
that is actually a normal situation in March. Most of the time, you're withdrawing from storage to the end of March.
Yep.
Now, as you go along through the winter, it becomes less and less, but there's still usually a draw on storage through the end of March. Usually the last week of March and the first week of April sort of gives you a feel about how the summer's going to go.
Yep.
And so If you're still withdrawing at the end of March, you're probably going to have a little bit stronger summer price wise. If you are injecting at the end of March, you're probably going to have a little bit weaker summer, at least to start off with.
Right. And manually tracking weather is a full-time job. That's part of the reason that we actually have a weather person on staff. So Brendan, if you're listening, good to see you. We need to get together. So Robert's asking, when LNG goes to 22, will we have enough gas? We may go negative. So in addition to LNG exports going to 22, we also have to think about Canadian imports coming in and whether or not the tariffs will bring that down, as well as our exports to Mexico. Are they going to be tariffed now as a repercussion to the Trump tariffs on Mexico? So there's a lot of pieces of the puzzle. But what I would say, Robert, is will we have enough gas? Yes. What will the price do to support that gas? And will there be a 6-month gap where we don't have enough? And that answer is likely yes. But I want to show you one quick thing, and this is something that we've covered before. In March of last year, we were 750 BCF over the 5-year average. We are currently 200 BCF, roughly, under. So that means that we, from a supply-demand corrected basis, we're a TCF tighter over the course of that year. That means we're 2.7 BCF lower than we should be on supply. That's holding everything equal between last year and today. That means 2.7 BCF. We need more. So
And that is on
more.
over the last 5 years where we've actually had incremental in demand.
Mm-hmm.
So we're lower on storage with an increase in demand.
Yep.
I mean, you don't have to be a mathematician to figure out that's probably mean we're going to have a little bit stronger prices this summer than we did last summer.
Yep. Crude oil and geopolitical events. This is my curveball. Bill and I actually talked about this because I threw this on there. And Bill looks a little confused. Now why would I throw that on there? Why would I throw this on there?
Whoa! Wait a minute!
What does crude oil have to do with anything? Well, actually,
so you don't have to have much production in the Permian to realize, oh, yeah, I get it. I mean, and it doesn't matter whether it's crude oil production or natural gas production. You understand it in the Permian.
This is part of Rogue Edge, which is our interactive chart system, which gives you access to over 150 interactive downloadable charts. You can find out more by going to energyrogue.com. But this shows how much gas we are creating and each month from the Permian. And what you can notice is if I take off the Permian has negative prices. Well, let's actually take a quick look at the basis over on this side right there. So when we look at Waha, and you have a $4.17 gas price today, or $4.20, let's call it $4.20. If Waha is $3.86, some quick math will tell you, what is that, 30, 40 cents?
Yeah.
That is before you allocate cost for transportation, processing, treating, so on and so forth, which
that's 35 cents at the hub.
Yeah. And that means that Waha prices are currently negative or at the wellhead. So what that means is when you're looking at gas production, let's go back to this chart right here. If I took off the Permian, you will see that we are adding production, most of it coming from the Eagle Ford, but we're adding 20,000 MCF a day or MMBTUs a day. 20,000 to 100 billion. That's insignificant. It's not a lot. But when we add the Permian back in there, we actually get up to 50,000. Still not a lot. And this is part of the reason that we've held a bullish bias is you have to track this, because if crude oil prices go to 100, we'll see a lot more gas. Because now let's look at one other chart that I want to show. Where is it? Crude oil from new wells.
10 cents.
What's that?
Said Waha yesterday on cash price was a negative 17.5 cents.
Yeah. Well, and this is part of the reason that we actually track how much volume comes in from the Permian, and these are active rigs by basin. What you can see here is that the Permian holds most of the rigs. Those are oil-based rigs, but they throw off gas in addition to that. And what you'll notice is that the new wells drilled. Oh, look at this. That's interesting. That's interesting. It's pretty well equally distributed. New wells completed, still the Permian. But this is why, because when you look at volumetrically, out of 105 BCF, the Permian accounts for probably 20 to 23 BCF of that. And that is at a negative Waha price or negative wellhead price. So understanding crude oil, to understand the Permian, to understand how much production you're going to have, and you've got to track OPEC plus policy changes, global conflicts, sanctions, and trade policies. So these sanctions can lead to, the sanctions on Russia led to a 50% spike in European natural gas prices. Actually, it was not a 50%, it was probably closer to 500%. And US LNG prices went up in tandem. So now when we look at all these things put into play, supply, demand, exports, weather, crude, and geopolitics, these are the things to watch. And these are exactly the things that you get with Rogue Radar, which is our product, which is $89 a month, which Max was asking about. So we track storage. We also allocate a convenient red light, green light system. If you see 1.6 TCF here, and you don't know, well, is that a lot? Is it a little? We actually attribute a green light if it is bullish, a red light if it is bearish. So when you look at storage, when you look at weather, when you look at production, Canadian imports, demand, LNG, Mexico, international, which are international prices, European storage, and European LNG, all of this is very, very important. And we condense this so that you can, at a glance, understand all 5 of these signals, because these are signals. Everybody thinks of technical analysis. This is the building blocks or the base of those signals, and it's part of the foundation of what New York traders and big institutional funds utilize.
Right.
When
They utilize they use these same signals in their algorithms to determine their trading strategies.
Yeah, totally.
And so you should too.
Well, and we created this because when we left the trading side of the industry, we realized we would have to pay $5,000 to $10,000 a month to have access to all this information. We created an alternative so that people could understand gas as well as crude oil in a very simplistic fashion that gives you the basics, gives you everything you need, plus adds narrative so that you can understand what is happening in the marketplace so that you can pivot to understand your market direction. So these are the 5 factors that we take a look at on the market signals: supply, demand, exports, weather, crude oil, and geopolitics. So our convenient red light, green light system, we cover these signals and we save you time tracking that down. And these give you real time, up to the minute information about what is happening in there. So watch these. What are our final thoughts? watch these 5 signals. These are the 5 signals, and you'll be able to anticipate price spikes, and you'll be able to simplify your process. Before you start with technicals, if you start with the basic foundation of fundamentals, then you are going to be prepared for anything that the natural gas market can dish out. And it's going to help you control your risk, whether you're a trader, whether you're a hedger, whether you're a consumer, whether you're a producer. This is going to help you in your business. So that's what do you think?
I think, and the other thing you can look at this is I was just looking at this as we're going along here. The more the red and greens are equal, the higher the volatility. That's just a real quick way to take a look at that.
You can see that on crude oil. Crude
Yeah,
oil is
exactly.
pretty equally spread. Natural gas is still
little bit bullish.
aligning,
Yeah.
aligning bullish. And we don't come up with an amalgamated final signal because each one of these is storage in February means more than it does in March.
Right.
Right now,
These are not weighted.
yeah,
And
weather
that's what we're talking about.
like storage is going to mean a lot less when we get into May, but weather is going to impact our opinion a lot more. Production is going to impact it a lot more, as well as our LNG exports. So these are the things
Right.
that we're looking at that are super important. But these are the things that we look at every single day. And we look at these inside of Rogue Edge. And it's part of the reason that we actually have our Discord room active every single day. And this is back to Max's question. I provided a video update today, and we were just talking about commitment of traders as well as what was happening out in the marketplace. And that's part of the reason that the real time, as these things are happening, you'll see natural gas spike up. But what happened? Why did it spike up? This is the mystification of, okay, was it a supply issue? Was it a demand issue? Was it, these are the things that you can't necessarily put into an API and actually get the data and just do your own models. So all of this is definitely important there. So listen, hey, Max, thank you so much. So listen, I think it gets back to,
if you put your effort and concentration into playing to your potential to be the best that you can be, I don't care what the scoreboard says at the end of the game. In my book, we're going to be winners.
That's right. We're going to be winners.
That's right.
And the main thing is be equipped with an understanding of supply, demand. At its basic roots, economics is supply and demand, and price will find the supply and demand. Storage is the third dimension or the element that allows supply demand to equalize over time, because you'll notice when we get into the demand curve, you'll see this, which is you'll see that during the winter, we have a much higher demand period, and during the summer, much lower demand period. And these are the trends that we actually track and trace all the time. So,
that's right, folks. So if you have any questions, reach out to us. Listen, this is what we do. And in fact,
That's what we do.
Exactly. I'm not sure which one's Spider-Man, but one of us ought to be.
I love this icon. I don't know if it's Cookie Monster or what, but that's what I always think about. So listen.
Folks, reach out to us.
Yep.
What we want you to do is be successful in your career, whatever that is.
Right.
And we can help you do that. And we can help you do that at a very affordable price.
Yep.
And the reason is because both Brian and I have been there. Yeah. We can feel your pain for sure.
Well, the main thing is that we want to provide an alternative and an option that saves you 30 hours a week of research and searching all the corners of the web, as well as the stuff that isn't quite published. That's the stuff that we save for videos, because this is part of what I consider the trader talk. You know, there
Right.
there is stuff that is not posted on data, you know, and that's the nuance. That's part of the reason that we do the live streams, because there's so much nuance when it comes to this, and there's so much that you can grab from data, but it also comes back down to the nuance. But again, the 5 key things are going to be supply, demand, exports, weather, and geopolitics and crude. So track those 5 things and you're going to be in a better place in 2025. So that's all I got. Any final words, Bill?
Well, just always think, you say, well, I don't need to do this stuff because I've got this person who's doing all this for me. Well, when that person gets that smart, guess whose job they're coming after? Just saying.
So listen, folks, thanks so much. We will see you next week and appreciate you. And listen, if you do us a favor, like, comment, subscribe, and pass it all on to a friend. So we really appreciate your support, and we look forward to seeing you inside. So that's all we got. We'll see you next week.
See you guys next week.